Good afternoon. Thank you for your presence. Always great to be in Aix with you and to see you attentive. Sophie Fesch, I'm a journalist at Le Monde, and I replace off the cuff my colleague Bruna Basili, who was supposed to facilitate this session. She's a journalist at the Journal du Dimanche. She attended the Rencontre for years, but you know that the Journal du Dimanche editing staff is on strike and conflict with the possibility of a new chief editor. So Rona is not here tonight. But anyway, with no further ado, let's look at the initial consequences of inflation. And to talk about it tonight, there is quite a remarkable panel. Éric Monnet, representative of the Cercle des Économistes, one of the best specialists of central banks. I recommend his books, The Providence Bank, to how to democratize central banks and economic policy. First time that Éric Monnet takes part in this Rencontre du Cercle. And then for the discussion, we'll be listening to Massimo Giorno, who is European Director of the McKinsey practice. The Director of Financial of LVMH, Sarah Wabian, who is sociologist, and who is the General Director of the CREDOC. And if you know she has very fine analysis on the idea of a commission. And Lukasz Art, who comes from Poland and who's worked in the central bank on monetary policy advisor, and he teaches at the University of Warsaw. So, with no further ado, I'll let Éric introduce the issue. Éric. Short introduction of this notion of inflation, which came much to a surprise to analysts and economists and many people, individuals in charge of macroeconomic policies, including in central banks, which, according to the constitution of modern states, would target inflation, and they want to make sure that prices remain stable in our own economies. A few years ago, 2 3 years ago, the question was more to try to get a bit more inflation in the Eurozone, which was then inflation came back, and nobody thought about it, and then it did destabilize economy and recreate situation difficult for our citizens and fellow citizens, and led to many questions. In history, all inflation episodes were always difficult to manage from a political viewpoint. Why is a source of destabilization? Before the roundtable, I was thinking about what Alan Greenspan said. He was the head of the central bank, Fed. He said, "What's the good inflation rate? 2, 3, 4?" He said, "Well, the proper inflation rate is the one that will not destabilize society." Well, it's not exactly an accurate figure, but in fact, inflation will trigger social phenomena and also political phenomena. So what do we mean? Well, you know, the question of it creates inequalities. So it also causes conflicts which may exist within businesses, which may exist within groups in society, but which could also exist between countries. We'll discuss it tonight because a large part of the problems we find in individuals, inequalities, conflicts as well. Well, people will argue about the cause of inflation, who should make the effort to lower inflation. Well, we see that at the international level, from one country to another, countries may blame the other for who caused the inflation, which country caused inflation, and who should bear the cost thereof. Now, why does inflation create inequalities? 3 reasons. First, based on incomes. If the incomes revenues income as much as inflation. For some people, it's not the case. Likewise for states, because when they taxes, and also problem of consumption for the same income, depending on what you consume. Likewise, for a household and companies, consequences will be different. Another point we might come back to is the question of debt. If you have a high debt, and depending on the currency, the consequence of inflation will be different. And again, we're back to these issues of for the individuals, for the businesses, and for the states. And what we'll do in this panel is try to debate, discuss the three levels, thinking about the initial consequences and the national consequences of inflation. Thank you. Massimo Giordano, because of your function at McKinsey, you have a European vision. So how do you see the consequences of inflation? Where does it hurt most? Thank you. Speak a bit French because I'm Torino. Everybody speaks French, but it's better if I switch to English.
Thank you very much for your time today. So to your question, look, most of us, most of the executives have been working in the last 15, 20 years in absence of inflation or with very limited inflation, or maybe in some countries, if you are a global multinational, but with very limited. Then in the last 2 years, as he was saying, inflation arrives, and by the way, it arrives not alone, because it arrives, starts end of 21, then it arrives with a war, it arrives with principal recessions, it arrives with big issues, supply chain, that were the consequence of COVID. So it's a shock in the market. As any shock in the market, I mean, we've been on a trend of long-term amplification of inequalities in Europe and in the US, in general in the world. Inequalities among the workers and inequalities among companies. So with companies doing extremely well and other companies doing less, and the same for workers. And the inflation, the immediate shock in the market has been to amplify those inequalities. It has had a huge impact on workers, with a group of workers, average workers, heavily penalized, and a small group super talented, super researched in certain niches, on the contrary, really benefiting from the mega switch. I'm sure we will hear about this, how these things are evolving. For companies, it has been similar. Some companies have been really suffering, in the short term at least, depending a lot on the sector they were. Take some sectors like retail. Many retailers have been in big difficulty because squeezed between the suppliers and the end customers. Take many sectors, all these sectors that were very heavy on energy, at least for a certain period, they've been really, really suffering. And other sectors, in parallel, have been less impacted. Also depending on the size and the possibility, also your financial muscles. Take also the banking sector. We had a number of banks who've been doing extremely well through inflation, able to reprice their assets and progressively reprice their liabilities. But then some maybe startups or small banks that had liquidity issues that basically failed. We have a number of startups or scale-up, as we want to call them, that were growing like hell, and they were stopped by the crisis of liquidity. But this is in the short term. In the long term, our view is that at the end of the day, good companies, great companies can deal with inflation. It's a question of how they face the different components. Obviously, for some sectors will be more complex, for others will be less complex. But at the end of the day, we feel that inflation is something that can be dealt with. And if you ask me, and then I lead it to the next speaker, if I am an executive, am I more worried about sustained inflation in the future, or am I more worried by the tech revolution, by generative AI, by sustainability, by carbon zero? How do I face those challenges in my organization? So I think that inflation is something that in the short term is difficult to manage if you have a certain structure. In the long term, at least in our perspective, can be managed. Completely different is for workers and for individuals, where sustained inflation in the long term is a big issue and very difficult to be dealt with. I leave the word to Sophie.
Thank you very much. Jean-Jacques Guiony, vous êtes un peu un ovni dans
Jean-Jacques Guiony, you're a bit of a UFO. Inflation at VLMH. You got pricing power, the capacity to to not scare your clients with prices, which is quite unique. So have you felt this inflation one way or another? Oh yes, absolutely. We felt it, and I think there are specific characteristics in the luxury industry which explains what you've just said. Our customers are not representative of the general population, even though we should not fantasize too much about that. In luxury, we sell to people of the upper middle class rather than to very rich people. Sometimes there are poor conceptions. Second, in terms of prices, is that we are used to we are exporters, and being exporters, we are experiencing the fluctuation of currencies. When currencies are strong, it's good. When they're weak, we have to increase our prices locally to maintain margins. So we are used to managing prices. And the third element is that there is a cost-related inflation like everybody else, but bear in mind that we are in industrial processes in terms of process and logistics, which are very simple. We are not assembling components coming from Taiwan, Eastern Europe, North Africa. We buy locally grapes or skins to do bags, and then we'll assemble them, cut them, assemble them locally. So we do have processes which are local and easier to control in that respect rather than some industrial complex aspects. Now, on those bases, inflation, cost-based inflation is easier to mitigate than most people. With our pricing power, which has many causes, I will spare you a refresher course on luxury goods, but basically we're not impacted by inflation. Sandra Wabian, you look at French society and the way French households resist more or less, you know, at different level from resist inflation at different levels. So, well, the situation of French households is not at all the same as that of businesses. So what we do observe is that first, a lot of constraint for a large part of the population with feelings of restriction, especially on food stuff. We have surveys with indicators, and we've had 5 indicators out of 10, and the French people said that, French households said that, you know, they restrict themselves on some food stuff. So it's a new thing. It could be a feeling or perceived, but there is a drop of consumption of 7.5%. Again, that's quite new in the history of consumption. So possibly a bit, you know, wastage mitigation, but, you know, and less consumption. And there is also a request for aid from food banks, you know, energy, food stuff, you know, essential dimensions. The second element is turn of uncertainty. Those mechanisms have been supported by the public authorities with various support and by companies because there's been increase in salaries. But the problem that households don't know how the companies will be, the prices will be kept or not, if the devices will be supported, will be targeted, and it challenges the form of model of society. What do I get with my work? What do I get with my salary? Enough to feed myself, have a house, to of course have access to some leisure. What's essential in life? We talked about that, you know, we thought the round table leisure. We see that there are some behaviors where we will limit ourselves on a daily basis to preserve some exceptional moments, which so several arbitrations that need to change and different look at society, because today, for example, one French person out of 2 is worried about the risk of shortage. You know, shortage. You know, that was something that's new. They question the society model, you know, and so their own daily lives, there are impact, you know, and more general impact on the role of the various players. Social justice as well. Who takes his or her share, and what is the share of businesses, and what about the public authorities with the feeling from the household that to have little margin for maneuver or little leeway. Luca, Art. Could you remind us what is the inflation rate in Poland, because it's higher than in France, and tell us how the Polish society is resisting and adapting itself? Thank you for the invitation for this conference. I would rather speak English, if you don't mind, because I will switch to English.
I can speak also in Polish if you wish, but it's more practical for all of us for me to speak in English. So thank you for your question. Yes, we have inflation, and inflation is a global phenomenon, definitely. But of course, we have huge differences also within Europe. For instance, right now in Poland, inflation in June is 11.5. As far as I know, in France is approximately 6%. So you see the difference. And also in Poland, we had high inflation even before COVID-19 pandemics. In February 2020, inflation in Poland was 4.7. In the Eurozone, it was 1.2. So we have huge difference among countries also inside Europe. And also what is important that, as we economists know, what is crucial for dynamics of prices, these are people inflation expectations. So if people believe that inflation is to be back to the target of the central bank, well, the situation is not so complicated. But the problem we have in many countries in Europe, including Poland, is that people do not believe that inflation is to come back to the target. For instance, in Poland, we have every month huge studies of inflation expectations of consumers, and they do not believe that inflation is to be back to the target. A couple of points I would like to make referring to your question. First, I would like to put emphasis on the fact that inflation is extremely painful for poorer parts of the society. It's extremely painful for people spending all of their income for consumption. If you are rich, you do not spend the whole of your income on consumption. And if you are rich, you have access to various ways of protecting yourself from inflation. You can invest in asset markets, buy real estate, etc. So it's clear that inflation, high inflation, is strongly contributing to raising inequalities, income inequalities, and income inequalities, we all know, also have very strong political consequences. Very strong political consequences. The last point I would like to make at this very beginning of my speaking in this panel is that inflation is rising the general level of uncertainty in the economy. So we had COVID-19, already COVID-19 pandemics raised the uncertainty in the economies, in various economies. We have war in the Ukraine. We have various geopolitical tensions all over the world. They are raising uncertainty in the socio-economic system. But inflation also is raising uncertainty. With high inflation, with high uncertainty, it is difficult for companies to plan investments. It is difficult for consumers to plan consumptions. And one point at the very end I would like to make, also, we have studies, empirical studies in economics clearly showing that high inflation, which creates high uncertainty, even can lower fertility rates, and these results are quite statistically significant. Thank you very much.
Merci. Luca Hart et Sandra Wabian ont insisté sur l'effet de l'inflation sur les...
Insisted on the effect of inflation on inequalities. Now, how does it translate among businesses? Massimo, how do you see this? Are there higher inequalities between small businesses and large businesses, between some countries and others? what seems to be to you most striking? And mostly we heard about a new phenomenon which we talk about profitflation or greedflation. Some companies which have an ability to basically are proactive in price rises, I mean, do we see this in Europe? Well, thank you for that question.
Say the massive impact of inflation is on individuals. This is especially poor people with lower income. If you look at enterprises, as I was saying before, you can see an immediate shock on most of them, some less impacted, some very impacted. Then if you go a little bit more granular, clearly the companies and the enterprises that have more financial resources, more capabilities, etc., can really react, even if they are in sectors that are not at best for inflation, but they can react and they can really rethink their business model. I mean, usually you have to go through the chain of what you do, so you need to review how you do products. I mean, he was mentioning before how in LVMH they do products. You need to review many companies are rebringing their suppliers from Asia to Europe. You can review this. You can review basically how your supply chain, you can review your talent market, and you can also review your pricing. I think it's just talking about repricing is a little bit difficult. Probably is always better to think about a new pact with your customer, a new relationship with your customer that is capable of staying with a different type of service. Just simply increasing prices is not always just the right recipe. But this is for organizations that are mature, have the financial muscles, and have also the managerial capabilities to face in a very structured way inflation. When you go to mid-size or small companies, things become more complex. And yes, you can always have the very agile organization, the very agile entrepreneur who is capable to quickly revisit the value chain. But you can also have situations where the small companies is in difficulty and at the end has to close. So there are statistical evidences that many of them have been facing this. If you take, for instance, the world of startups. The world of startups, and again, I'm very passionate about this. We had a lot of, finally in Europe, after many years, we've been investing in startups, and the amount of funds going to startups, it has increased over the last years. Last year, with the financial crisis that also is obviously strongly linked to inflation, we had -20, -30% of funding going to startups, and many of them were not able to sustain the new business model. This has been a big retrench. It is already restarting, because this is probably within the small companies, the area that is more agile in rethinking themselves. But clearly, in my opinion, there is a gap between large organizations who can manage with this versus small organizations who, for them, some are very good, are very agile and can do it, but some are really hit by this. Regarding your question, look, there is no statistical evidence of what you're saying. Yes, there may be sectors that are benefiting, but look, in the long run, this is not the equation, because in the long run, there is nobody who can sustain, I would say, unfair profits. So, in my opinion, this can be a window of some months or maybe a year or whatever, what you're saying, profitflation. But honestly, I don't think, also as an executive, you need to be extremely careful that this is not a game to be played. So in the long run, investors, the society, employees, etc., are looking at you. So I think this is not an equation that, and by the way, is not sustainable in the long run. Yes, there may be windows of this, but there are also windows of very severe penalizations of companies. So in a way, it can compensate.
Jean-Jacques Guilloni, justement, vous travaillez LVMH avec des fournisseurs.
You work with suppliers who are SMEs. We talked about the roundtable. We talked about the manufacturers of perfume bottles. How did you help them in this inflation period, which was difficult for them? And do you consider yourself as a group that could take advantage of this profitflation or could accelerate inflation through the price increase because you have this price power? Let's come back to what Massimo said and on the way you asked the question. Did we did we help our suppliers? In many cases, we didn't have much of a choice. I mean, they said, you know, they imposed the price increase rises that were justified. But when you manufacture glass bottles, because of the price of energy in the cost, you know, that was a point of survival. So they imposed price increase, which we had to, you know, which we imposed then to our own clients, as I said initially, because we can do it, but it's not so much. We never felt that we wanted to help companies. We had companies for which it was vital to have a price increase. So we are in a chain of added values which is rather precise and very efficient. Well, there is a rapid impact, repercussion now. Question is it an impact on all links of the chain, or does it block, and is there a player for some reason, competitive or strategic, cannot have this impact? And then it becomes very complicated. It wasn't the case for us. Do we take advantage of? Massimo referred to cases, greed inflation. Well, the term is inappropriate. Take the one example, not too far from here. CMA, CGM, no better example. At one stage, the price of the container went from 1,500 euros to 15,000 euros to go to Asia. I couldn't see CMA, CGM not applying the global tariff. They did it, so they knew it wouldn't last. So what they did, they got a war treasure, you know, a war bounty, but now they use it for strategic purposes. And it's interesting, they know that it will not last. They expand in logistics, they do M&As. I'm not an expert in the domain, but, you know, we can see that this bonus, you know, was not there to last, and it made it possible to them to reinforce their strategic position. It's very opportunistic, but very smart. Not much to say to that, and there is no moral judgment to express in this situation. As far as we're concerned, well, we have a strong invitation of our benefits, our profits. We know, being aware the way profits are made. It's not the price increase that explains the increase of our profits. It's mainly the global increase of the volume of sales. Prices are part of it, but it's a small aspect, but it compensates for cost increase. It is clearly the increase in demand which explains the increase in profits.
Sandra Wabin, we've seen that we weren't used to these inflation phenomena. And with respect to company strategies, adapting to their customers, the changing the size of products, for example. So we heard shrinkflation. The idea of households being able to adapt to inflation, so smaller packages for households. Did you do anything like this? Well, this is a phenomenon that increased during the period, but it was already present, in fact. It's not very well known. If you look at organic products, they're more expensive, and the quantity is often smaller in the packets. So that's something that we have in France, but we can protect against that kind of thing, especially in the food sector. There's the price per kilo strategy. So we're talking about products that symbolically are associated with important periods. We've had price increases for sugar, eggs, flour products that it's very difficult to do without. We buy them on a regular basis. So that's kind of, you know, it leaves its mark on people, on their pockets. We're in a very peculiar kind of period. You know, we've just come out of COVID, which was linked, and then there's the pension reform in France. All of these things have built up, and then crises. So, you know, maybe it's just a series of crises. It's a perma-crisis phenomenon. So it means distancing from society. You know, their universe, people's universe, their leisure activities, everything that happens in the household. So you were talking about shrinkflation. This is something that can happen. because of distance in relation to consumption. So you have to review your choices. Sometimes you have the feeling that, you're at the end of the chain and the joke's on you. Luca, perhaps a question, more of an economic question as an economist. The monetary policy, can it deal with inflation? And when you look at things in Poland and what's happening with your neighbor in Ukraine, do you have to have a considerable budget expenditure? It's a very specific period, isn't it? Trying to deal with this inflation. It's a terrible crisis. It's a major crisis in all fields. Everything is pushing prices up.
Thank you for the question. Well, in the long run, inflation is bad for everyone. This is the point I would like to make. The second point, somebody mentioned greed inflation, but I would add that I'm quite skeptical about this very idea of the greed inflation because, even if we have greed inflation, let's assume that we have greed inflation, it is possible only if you have enough, let's say, aggregate demand in the economy. Without demand, companies simply cannot raise prices so easily, okay? And central banks can influence, the aggregate level of demand in our economies. But the point is that the situation is quite difficult because, we have policy mix, so we have monetary policy and we have fiscal policy. So I think that strong cooperation between fiscal and monetary authorities is needed in the face of such high inflation. And what is also very interesting and important right now, that we do not have clear-cut border between monetary and fiscal policies. Why? Because as central banks, we started, and we did it rightly, I think, we started buying government bonds. And by buying government bonds, we are influencing this fiscal space of governments. So this is also pose a fundamental question about the independence of the central banks. One point I would like to mention, of course, not everything, unfortunately, is under control of central banks. We can influence aggregate demand, but we have various factors influencing prices we are not controlling. For instance, you mentioned greed inflation. In Poland, we are talking about green inflation. For instance, you know that the costs of green transformation for Polish companies is extremely high. It's totally different situation than the one you have here in France, that you have nuclear production of electricity. We do not have. So our companies are paying for carbon dioxide allowances, and you know about the skyrocketing prices of carbon dioxide allowances. And one last point I would like to add to this debate. We are talking right now about inflation in, I would say right now or in the short run perspective. But I would like to put emphasis on some factors making me a bit pessimistic about the ability of central bankers to have inflation at the target, let's say 2% in the long run. In the last decade, say 3 decades, till the beginning of the COVID-19 pandemic, global inflation was quite low. Why? Because we have 2 important factors. We have globalization, so we have cheap products from India, China entering global market, and we have demographics, so we have hundreds of millions young people from developing countries entering the global labor market. But it is changing. Look at China. The society is China, the aging of the society in China is so strong. And also, I'm not to tell you that, globalization is to end. Definitely not, but we have, various geopolitical tensions, China, Taiwan, Ukraine, etc. So I think that in the long run, we may face, a huge and green transformation. So I think that it is not so easy in such circumstances to have inflation under control, and maybe we are to face higher inflation in the coming decade. I'm to finish, so that's why some economists, for instance, Olivier Blanchard, they are proposing, well, let's raise the inflation target of the central bank, for instance, from 2 to 4%, because we have climate change policies. So we should allow for higher prices of carbon-intensive products, for instance. So the situation, again, is quite complex.
And in Poland, do you have some consequences on inflation of the war in Ukraine?
Yes, you know, the cost of helping refugees from Ukraine coming to Poland is very, very high. We do not have, you know, refugee camps in Poland. This is, you know, I would like to repeat, we do not have refugee camps in Poland. We welcomed more than 1.5 million refugees in Poland from Ukraine, so the cost is very high. So the fiscal, so this is the fiscal policy. So again, the government, you know, has to spend more money also due to Ukrainians coming to Poland. And as you all know, our government, maybe not all, but our government, you know, decided to have 4% of GDP to be spent on military and army. So you know that the conflict in the Ukraine, you know, has strong consequences for the Polish economy, but fundamentals of the Polish economy are very strong. I'm constantly, for instance, I really constantly surprised how strong Polish zloty is vis-a-vis euro and dollar, having full-scale war next to our border. So the fundamentals of the Polish economy are strong, and we are in the European Union. So this is a strong anchor for our economic policies.
Merci. Luca, tu as parlé de l'effet de la...
Luca, you talked about the effect of transformation, of decarbonisation on prices, greenflation, and perhaps a form of de-globalisation on prices. Who do the French make responsible for this inflation? And who are they angry about? Does this have political consequences? Yes, it's fairly peculiar in France. We always turn towards the state when there's a problem. So who should fight against inflation? The French say it's the state. The state has to do something about inflation, bring it down, which is not a picture shared everywhere. There's also a bigger impact in France, in spite of the fairly low inflation rate, in terms of morale, the morale of the population. So we're always very pessimistic, and it's added to that pessimism. And then there's, you know, the time it takes for actions to be implemented. There's a focus on day-to-day activities. So the state has set up checks, one-off measures. And the difficulty of all of these provisions is that at the same time it's creating a feeling of injustice. People have the feeling they don't have access to things that, you know, below the thresholds, or they don't know how to obtain checks, for example, that are being dished out. So what we're earning in agility, we're losing in social cohesion. So it's a mechanism that we've had in France for 30 years. Some social services and help is going down, but we're focusing on lower income people because we think that that's where it should be focused. In France, we've got a social protection system, a social welfare system that's very good. It limits poverty, but at the same time, we're creating competition between people who are unhappy, between the lower classes and the middle classes who always feel as though they're losing out. So, you know, how do we provide aid through public policies with inflation, with COVID and other situations? Who decides on the help that is to be dished out, and who is going to benefit from it? How long is it going to last, this help? And what is, you know, how can we see justice and democracy in all of this? So the French, they want things to move swiftly, they want things to be efficient, they want us to act, and at the same time, they need to feel safe. they need to see that things are stable. So there are a lot of expectations with respect to the public powers, when in fact, you know, one might expect companies to do something, but there's the feeling that companies are not doing anything. Jean-Jacques Guillaumy was talking about the freight prices, so transport prices that are going down. What's going to happen now, do you think? You know, the tightening of the monetary belt, is it producing effects? What about the growth that we're seeing? Does it depend on the month? What about what we're seeing on the labor market in the States? We're not seeing that much of a slowdown, but are we seeing prices increase other than transport? Are we going to go down a notch in inflation, or are we not going to go down in inflation? The example of freight is good. We could take the example of energy, the price of gas. These have changed not because of governmental action, because they were too high to begin with. There was a bottleneck. So they didn't stay at the height that they were at. So in terms of the monetary policy, and this is the question that you asked Luca, this has the power to put the brakes on inflation. Eric cited Greenspan. I'm going to cite Volcker, the predecessor, saying that inflation is like toothpaste. It's easy to get it out of the tube, but it's difficult to get it back in. And that's what we're talking about. Monetary policy, can it fight off inflation? Well, we don't know. Even if the central banks are ready to go as far as is necessary, Volcker increased its rates by 18% in the United States. Are they ready to go further? Are they ready to go there today? Keeping in mind that all states have a lot of debt, they're indebted up to their necks, and I don't think any state would be able to manage the world debt and how it unsettles everything. So there's a kind of a pyramidal effect. Then you can look at consumers' behavior. But the basic question underlying all of that is, how far are these central banks going to go? I think that today nobody knows. Do you fear this as the finance director? Do you fear that there will be an effect? When the job figures were good on Friday, the stock exchange prices went down. Are they expecting prices to go up again in the United States? Some analysts are saying, be careful of the share prices because of growth for the luxury sector. That can bring the prices down. It brings the stock exchange prices down. Yes, it has gone down a bit. But we're reasonably comfortable. So the CFO spends a lot of time talking about stock exchange movements. But, you know, we can't really tarry with that kind of thing. One might expect that today we look more at the rate of indebtedness of companies and worry about very indebted companies. We're seeing that there are more and more bankruptcies, but there's no tsunami, there's no general panic movement in terms of debt. It's true. We've got rates that are much higher than several months ago because they were at zero. Rates at 3% in terms of financing companies and cost of capital. It's not something that is, 3-4%. It's not really destabilizing. The cost of capital is still fairly low. Share prices are fairly high. There are benefits. The profit is quite low. So there's no real destabilization effect. Now, the question of excessive indebtedness, this always happens in the same way. There's a problem somewhere. One of the players is too much indebted, and he takes everybody else with him. So there's the case of Casino, but not everybody was taken with Casino. I'm not familiar with the Casino situation, but it's a very specific case. We're not talking about bankruptcy. Who's going to take over? Thank goodness. Who's going to take over Casino, the supermarket chain? It's something that's interesting for lots of people. So we don't know whether the company's survival is really being questioned. Maud, do you see any fields where prices might go down? Where there are sectors that will draw inflation downwards or slow it down?
So also because if you look at the history, very rarely after an inflation period, the prices have gone down, apart from specific sector like energy, where is a clear pass-through. We have, what is interesting, in my opinion, is looking forward, is what can we expect regarding prices and regarding inflation. We have just published a report around assets growth in the last years. And what you can see is that in the last 20 years, assets in the world have grown much, much more than GDP, much more, and leveraged, because basically for each dollar of asset, $1.9 of debt. So we had, basically, we have had a society of assets with a constant productivity decrease of below 1%, which is a very unhealthy place. Now, if we look forward, now this paradigm has been put in question mark because inflation is hitting, obviously interest rates is putting some questions on the asset value, on the sustainability. Now, you can see 2 or 3 scenarios. One is we go back where we were, so we continue with very low inflation and back to asset value. By the way, with continuing inequalities, because this is amplifying inequalities. You can have a scenario which is the Japanese scenario, which is what happened in Japan in the 90s. Basically a big decrease in value of assets, which is a big problem for many people, again, hitting a lot people with poor assets. And finally, there is a scenario which is, look, maybe what happens is a heavy investment into productivity, which is the scenario we hope it will happen, and invest a scenario where maybe a little bit of inflation will remain, because if you invest, there is some inflation, obviously not at these levels because this is dangerous, but with a scenario where we recover productivity and GDP growth more than assets, which is very healthy, because basically it creates jobs, it creates traction, it creates small caps, it creates mid-corporates, it creates a number of virtuous things. And this will obviously have an impact on the entire society. So even if some prices, to go to your questions, are not going down, but then the society is able to catch up, which is the benefit of growing in GDP. So we really don't know where we will land, depends on a number of factors. But clearly, we've been, yes, many people like the last years, but the reality is that we lost a lot of productivity. We lost a lot of GDP, especially in US and Europe. So this has been really challenging. So the low interest rate environment, unfortunately in a way, has not been used enough to make the proper investments. I think in a way you can consider this a lost occasion, because we could have invested more in tech, we could have invested more in energy. The states could be helping more in energy. What you were saying, I totally agree. Therefore, some companies, the green transition is a huge cost, but should be sustained, because somehow we need to do the green transition. So the question is, who is going to sustain it? So the point is, in my opinion, we come from an era with low interest rate that could have been a phenomenal occasion for heavy investments in the modernization of the society. Some companies, some states, some institutions have done it, some have not. So the question mark is what we are going to see in the next years.
Merci. On peut quand même se poser des questions quand même sur.
Yes, we need to wonder about the economic theory, where we always said we've got to reduce our deficit when we had this golden opportunity, as you say, to invest more. We've got a few minutes for questions. If you have any questions in the audience, I think there's a roving mic going round. If you have a question. No, it's a subject that's quite complicated. Yes, there's a lady here. Yes, I have a question for the economist. Many economists are saying today that monetarism is dead, and that the monetary mass is not linked with the inflation phenomena that we're seeing. Is it a new truth, or is it still the subject of debate? So there are two economists here. So let me try and say something about that. So it's a very good question. 2 years ago, we said that monetarism had got it all wrong because the central banks saved the economies in 2008. And to do this, they increased their monetary basis. They bought bonds, and that increased the currency, and there was no inflation. And for 2 years now, the question has been raised again, because we're seeing a correlation reappear between the monetary mass, which is the fetish of monetarism, and inflation. So let me try and do this quickly. Why is it not a return to monetarism? Why is it not a validation? Well, because of two things. The first is that the monetary mass has increased very strongly. During COVID, there was an accumulation. People kept their cash. The savings accounts were all full. So this wasn't directly linked to the policies of central banks. We saw, above all, that inflation continued when people were using their savings. And then the link between the money created by the central bank and the money that's circulating in the economy, that theory is not a valid theory. Luca?
The time of, big fears of the past has ended. Not only monetarist, but also Keynesian, I think, thinking. What we are witnessing now in the economics is a strong empirical turn. So we are doing case by case, we are analyzing what are the determinants of inflation. Sometimes inflation is a monetary phenomenon, but sometimes, I think more often, it's a psychological phenomenon linked to people's expectations. So it depends, and I think that we have to be very pragmatic also in the central banks in analyzing, causes of inflation. So I do not see any possibility that, this old monetarist thinking is to come back in current circumstances.
Merci à tous. Eric.
Thank you, everybody. Eric, you have the floor for the conclusion, and then bring out your crystal ball and tell us what's going to happen in the coming months with respect to inflation. Now, I can't make any forecasts because I'll disappoint people, but I can insist on a certain number of things. We've had a very broad overview of the impact of inflation on households, on companies, on public policies. We're seeing that there's a lot of uncertainty. There are three things that are important. The impacts that inflation will have on consumption. For the moment, inflation hasn't yet led to a considerable drop in consumption on average. It has for some households, we've talked about that, but the level of the national economy in France and in Europe, it hasn't seen any stagflation, a situation whereby we've got an economic crisis and an increase in inflation, making public policies more complicated, because it's about relaunching the economy by limiting inflation at the same time. Nobody really knows how to do that, so there's a lot of uncertainty. There's another thing that's important. There's a word that we hear in public debate. Profit and salary share, between capital and work with added value. Historically, especially in the 70s and 80s, when inflation went up, the share of salaries went up because salaries followed, wages followed. So inflation went up to the detriment of the capital the equity of companies. And when this happened in the 80s, this was to the detriment of workers. That's not an optimal situation. You've got lots of fluctuations between the value added in an economy. So things were shared. So the capital over the past few months seems to be getting back on its feet. So we're wondering how we're going to get out of this inflationist episode. So when it comes to wages, then we're in the situation of the 70s, or no, we're not at all in the situation of the 70s. We're following a little bit. Even in the 70s, we didn't have an equivalent increase in the value-added share of work. There was the advantage of the wages, and that's clearly not the case today. So there are environmental challenges that are very important as well. So in theory, it's very simple what has to be done. Goods that are polluting the environment, that are dangerous for the environment, their prices need to go up. And, you know, inflation can take that into account. If people consume less, that would help. But this can only work if there are replacements. When the most polluting goods prices go up, you need to have replacement products, other products that are not as expensive. So it's a question of timing. Are we going to have the replacements in time to be able to manage the environmental transition? Thank you very much to everybody.